Welcome to this week's market drama. We'll begin with the S&P 500, which was up 0.9%. NASDAQ was up 0.8%. They're both up now 23% year to date. Oil was down 9% for the week. It is now down 4% for the year. The reason oil was down was that fears of possible Israeli attacks on Iran's oil and gas infrastructure subsegment. And that also helps the rest of the other sectors, as this was definitely a tail risk that was a concern for the markets. It still is a concern, but fears are starting to come down a bit. Now, that's not the only reason stocks rallied. We have two main drivers. One is on the economic front. The other one is on the earnings front. So I'll start with the economic side. First, we had retail sales here in the United States numbers come out. They were better than expected at 0.4% month-over-month growth. As a reminder, consumer spending accounts for roughly 68% of GDP. So this is an important number. As a result of that, when we look at, for instance, the Atlanta Fed Now, GDP Now forecasting tool, after this number came out, the GDP growth expectation for the third quarter is now up at 3.4%. If that actually comes to fruition, that would be much faster economic growth than you would usually see as you're heading into a recession, right? So that number doesn't come up until the end of October, but this U.S. retail sales is definitely kind of pointing a rosier picture than originally estimated. On the earnings front, we had stocks like Netflix outperform expectations. As a result of that, that stock was up 11%. After it surpassed the analyst EPS estimates. We also had Taiwan Semi report better than expected numbers. So that's at the micro level, right, at the individual stock level. But when we look at the broader picture, 14% of companies in the S&P 500 have reported their Q3 numbers. Of these companies, 79% of them have reported EPS above estimates, which is above the 5-year average of 77% of companies reporting above estimates. So good start so far for earnings season, and earnings really drive the market in the long term. So that's obviously a good story there. Now, just to kind of take a step back as to why the market's near all-time highs, right? This was the 6th consecutive weekly gains for the markets. What the markets are focused on are economic growth, corporate profits, and Fed policy. For a little bit, Fed policy was kind of the top topic that the market had focused on. You know, will they start lowering rates? Now that they are starting to lower rates, it's still important, but not as important as will the economy hold up? If the economy doesn't see a recession while the Fed is cutting rates, that's obviously more appealing for stocks. And then equally important is do corporate profits hold up? Do they continue to show growth year over year? So this past week definitely gave tailwinds to the markets, because why? Economic growth seems to be holding up slightly better than expected, and corporate profits continue to deliver. Fed policy is not changing direction. So as long as those remain intact, I think the market seems to be receptive to that, hence the 6 weeks of consecutive gains. That is it for this week. Stay tuned for next week.